Yo. How is everybody doing? Let's get some background. Get some background music here. Let's pick a let's pick a decent one. Right. Pop up chat. Let's put chat there. Let's get you chat here. Pop up chat. Put you there. Okay, we're gonna look at forex today, guys. We're gonna look at forex, not futures. Okay, just because we're gonna mix it up a little bit. Okay, let's do this. This might be a too upbeat background music, but hey, it's okay, I guess. We vibing. Let's put some emojis. Display capture, no. Normally just picks up the window. If I move that. Interesting. Hang on a second. Trading. Come on. Trading view. Yes. Why is it not picking up my trading view? Hello? What is going on here? Bear with me, guys. I'm just doing a little bit of technical support here. Match title, otherwise find the window is the same. This should be working. I don't get why it's not. Let me exit. Open. Double click. Trading view. Yes. Interesting. Having problem after problem today, it looks like. So this is a... Let me add a source. So window caption. Add to existing, which is trading. Done. Sorry guys, I'm just trying to deal with this. That. Seems like it won't use window capture for some reason. No, that's not what I wanted. See, it does actually work. It's just not picking up my trading view. So you do work, you just don't want to work for the window that I'm trying to have open on my screen. That's interesting. Very interesting. So do I have to use display? I did not want to use display. I don't like this. Trading. There, what? What was so hard about that? Why did that take so long? I literally did nothing different. I don't know. Sometimes these things. Okay. Today is a little bit of a different stream, guys. What are we going to do today? We are going to look at some of the forex markets. We're going to look at because I realize that some of you are not all trading futures, so some of you want to trade forex. So today, maybe tomorrow, we'll go through some forex pairs. We'll go through some forex trading. The strategy is still the same, guys. So if you don't know, how do I copy this? Oh, it doesn't matter. Okay, so what I'm going to do is I'm going to go through a few strategies today, and I'm going to highlight some of the key factors in those strategies. And today we're going to try to look at entering, well, not entering, but calling out a bunch of trades on NASDAQ, ES, gold, euro, and AUD USD. If there's another forex pair that you guys want to look at, let me know inside the chat and I can open it up. Let's take another pair. Let's just do another pair. Which pair can we look at? Let's get rid of this. Which ones did I look at in the past? GBP, JPY. Forex. GBP, JPY. This one. Okay. Right, the reason I want to look at GBP JPY as well is because, as you can see, it normally goes the opposite way to euro. Okay, So if euro is going down, GBP generally, you don't want to take a short on GBP. If euro is going up, then you don't want to take a long on GBP. That's the general rule, okay? It's not a set in stone rule. It doesn't mean it has to be that way. Generally speaking, it's an extra confluence so that you don't it's like gold and the DXY, okay? If the DXY is going up, gold generally looks like it's going down, okay? But sometimes that's not the case. Yeah, guys, so welcome to today's stream. I do have background music on. It's a little bit more upbeat than we normally typically work with, but yeah. Okay, so firstly, guys, if we do a top-down analysis before we get into the strategies, let's do each pair top-down analysis, okay? Now, firstly, let me go through the indicators, okay? I use these two indicators for now, okay? I have used so many indicators in the past. I've used moving line averages. I've used inverse fair value gap indicators. I've used SMT indicators. Let me see. Have I saved any of them? Look at all the ones that I've used before, guys. Look at that. Okay. MACD. I've done CM, EMAs, trend bars. I've done power of 3. I've done RCT concepts. I've done so many. So market sessions, which are good. Orb strategy, RSI strategy. These are all the strategies I have tried. Super trend, Swift algo was an actual indicator that I paid for, and it basically tells you when to enter. Like it'll say long, short at this area, but volume indicators. So as you can see, guys, I have tried a lot of indicators, and this is not all of them. This is just the ones I favorited, right? So the ones I'm using now is this limited LTA concepts, okay? And basically, this is what this indicator does. It shows me, and the Khan showed me this indicator. It shows me on the hourly, okay? Let's just do that. I don't know if you see it is quite light there. Hourly and the 4 hour, okay? Now, why is this important? Because here's the price here, okay? This is the price. So if I look at this hourly, okay, there's the price currently. I know that it's inversing an hourly fair value gap right there. Can you see it? So if I zoom in a little bit, there's an hourly fair value gap. Now that will be here somewhere, okay? But on my 2-minute chart here, I can't see that hourly fair value gap. You see? Whereas if I go to the hourly, I will then have that fair value gap here, right? See, it's there. But on the 2-minute and the 5, even the 5-minute, you can't see that hourly fair value gap here, right? But all these couple of candles is what makes it an hourly fair value gap. So it's just basically allowing you to see to the left. Because I'm sure you've heard traders in the past say, well, if you're not sure about the entry, if you're not sure about your price action, if you're not sure about your trade, if you want more confirmation, all you need to do is look left. They're not wrong, guys. Because if you look left, you can see that should this hourly candle close inside this fair value gap, then there is still a chance for it to then go up again because it's respecting the fair value gap. See? Now, if you look on the other end, this is the 4-hour candles. we are delivering, see this point here? We are delivering from a 4-hour fair value gap. So it doesn't have to respect the hourly fair value gap and come back up. We have already come into the fair value gap here. We have tested it. And now there's a possibility, because we have done that, and we can clearly see there's a 4-hour fair value gap being tested. We now have to say, okay, where is the next liquidity that this could potentially go to? Since it's not inversing the 4-hour, because if it was inversing and closing up here somewhere, okay, so if it closed here, that's inversing the fair value gap, then we could target all-time highs, okay? Since it's respecting the fair value gap, okay, if this candle closes below this green candle here, then first liquidity to be taken would be this, okay, and then obviously you would then target previous day lows. So this is an important fair value gap for the 4-hour fair value gap, because it all depends on how it reacts from this level. You see now why this indicator is kind of important, because yes, I could go to the 4-hour and I could look, and I can go to the 1-hour and I can look, but you know what, this is convenience. Okay, so that is why we did that. Okay, so that's just explaining why I use this indicator and why I think it's a decent indicator to have, right? Secondly, I used another indicator from my friend who developed it. He spent a long time trying to develop it, and for the most part it is quite accurate, but there are times where, for example, it'll say bullish, bullish, and then it starts reversing down. So it's not a set in stone, it's not 100%, but it is a very good way to measure if your direction is right, if you're looking at market structure shift, all that stuff. Okay, so this is the RCT entry model beast mode. Okay, there's only 2 of us that are using this in the world, okay, because he developed it and he didn't publish it, so it's just the 2 of us, right? Now I won't get into the details of the indicator because that's kind of his thing, but long story short, on the corner you can see here there's a 4-hour, a 1-hour, and it will basically summarize, say if it's bullish, it'll say bullish. It's bearish, it'll say bearish on the 1-hour and the 4-hour. Okay, it'll say last sweep of liquidity. Last sweep is Asia highs. Okay, so there's the highs, it's swept. Okay, market structure shift state. So if it says bullish or bearish on market structure, that just means like if this pushes up here, there's a market structure shift, it'll say bullish. Okay, and entry zone, it'll actually give you the entry. Okay, so on the 2-minute, if I drop to the 2-minute or the 1-minute, oh, because we're not in the time, so this entry activates from when to when, session times. So there's certain times it will only activate. Okay, so right now, if this was in the time that it was activating, which are the key times, not just random times, it could say entry, stop loss, take profit. Okay, so that's the indicators that I use. In the future they might change. From time to time I might add a few things here and there. It just depends. So that's what I use, and that's what I'm comfortable using. Now I am going to go through all the three strategies that I'm using, and in more detail, of course, because we've got the time today on today's stream. But what I'm going to do is a top down. So what we do normally is you go to the daily, and I'm lucky enough that the indicator that Khan created, this one, tells you previous day high and previous day low. Otherwise we would have drawn a line from there to there, previous day low, previous day high. As you can see, it has not taken the previous day high or low, right? So if it comes down, sweeps the previous day low, there's a reversal, and it starts to make its way up, then we're looking at previous day high as a target. So we're looking at this fair value gap here got respected, and it started to pump up. So there's a few things on the daily you can look at. Then you look at the 4 hour. Okay. There's the lines. As I said, those white lines are previous day high, previous day low. The orange box is Asia session. The green box is London session. Okay. The blue box will be New York session. Now, if I look at the 4 hour, we already know the 4 hour because we've just gone through the 4 hour. Okay. So we don't need to do a top down for that. Now, some people will draw the 4 hour fair value gap here. They'll draw it out, which is good. Okay. However, if there's a 4 hour here, for example, you could draw out this fair value gap because it's a strong draw on liquidity. If it breaks these lows, then chances are it's coming here. This is inside a 4 hour fair value gap. It is a very strong draw on liquidity. Okay. So this whatever happens here, if it respects the bottom, the previous day low, and then goes up for previous day high, that's fine. That'll be today's movement. If it breaks previous day low, retests it again, and then comes down for this level here, then that'll be another retest level to find out what our direction will be from there. Then you look at the hourly. And when you look at the 4 hour and the hour, guys, you're still looking for fair value gaps, liquidity, inverse fair value gaps, all that stuff, because that'll tell you a story. Okay, we know that there's 30 minutes left on this candle. Until this candle makes a decision whether to close and inverse this fair value gap or respect this fair value gap, we won't know which direction the trade's going that day. Okay. Then I go to the 15. Now the 15 is where I would start. I would do this, okay? This is just something I sometimes do. I'll say, even though I know this is a 4 hour fair value gap, I'll say there's a 15 fair value gap, okay? And yeah. Okay. Why do I draw these out? It's because price is in the middle, and if it comes and sweeps previous day low, as I said before, sweep previous day low, it'll test this level again and decide what it wants to do. This previous day low is over here, right? So these are strong draws on liquidity. Then we go to the 5 minute and we look at it all over again. And the 5, as you get down in price range, the 5, the 3, the 2, the 1, I won't go the 3, 2, 1 when it comes to top down, okay? I'll stop at the 5, basically, okay? Occasionally I'll go to like the 2 and the 3 for entries and stuff like that, but you're looking for an actual direction of the day. You're not going to look at the 2 or the 3 or the 1 minutes, okay? So what I'm looking for today for NASDAQ, okay, it's 8:30, so this is when price starts moving a bit, so we are a bit late today. Okay, so NASDAQ, and well, we've already said that these are the targets that we are targeting. But what I want to do now is I want to go to gold. I'm going to reset the chart. We're going to look at the daily. And look how overbought gold is. It's actually insane. Now, logically, if you were a logical person, you would say it's left the fair value gap here, so we have to come down. And that's what I've said multiple times throughout this entire move. Okay. And more often than not, I will get wrecked because I think that I know that the price needs to come down in this level, which it very might do that. It might actually do that, right? But until there's a massive market structure shift, you can't say that. Because it could just, like from here, it could just go boom, 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 and keep going, right? So if we look at the 4 hour, what do we see on the 4 hour? We see a big fair value gap. We see a bunch of liquidity targeting at the bottom. We see previous day highs and lows. If you go to the hourly, is it better? This shows signs that we're going to come down and take some of this hourly fair value gap levels. Okay. Since we've just opened up and we got a bit of volume, so we can drop down to the 15. Okay, we're targeting this area first. So this area would be a target of interest. Okay, obviously this will be a huge target. So if it breaks this area, we're looking at a market structure shift for a way on the way down. Okay. Let's look at the 5 minutes. Previous day high has been taken, so the typical previous day high and low above does not really apply now. It's created its own high, but it has taken the London highs that it created. This could look similar to an AMD setup. Okay, so accumulation, manipulation, distribution. Okay, it's closed below here. A bit of a market structure shift, not too much. It comes up into a fair value gap, and this could be your short from here, there. Okay. This would have been your short here. Reason for that, this fair value gap here was retested and it was not inversed. See that? So you can either start here with the bigger stop loss, right? If I was personally, that would have been the trade there. Okay. But let's say for argument's sake, because we caught it here, that's our entry. Just because, you know, we saw it then. So let's say that's your entry. Now I'm going to go through the AMD setup for you guys. And this is very risky. Why is it very risky? Because we are, let's put this back. We are at all-time highs. So there's no, like, it doesn't have to do this, what we're saying it's going to do. But it has left hourly fair value gaps open. And it's left a big 4-hour fair value gap for it to be tested. So if it comes and tests the 50% of the 4-hour here, then that's 1:2 something. We'll be at break even. We'll be at 1:1 our stop loss. So we chilling at that point. Okay, so that's gold, guys. I'm sure if I went down to the smaller time frames, I would have seen an even better entry. We go to the 5 minutes, it's there. Also remember, guys, on the smaller time frames, let's see the 2 minutes. There's a lot more candles in the area that you want to take a short with. The 1 minute. I'm seeing a lot of entries here. That's gold, guys. Let's look at euro. Okay. What do we see? Let's start at the top again. We go to the daily. The daily, we see it swept liquidity here. Right. There's a fair value gap higher up that it's delivering from. Coming down, market structure shift. So either we come back up into this breaker block area and we test it to come back down, or we just melt at this point. So it's either retracement up or we melt. kind of obvious, right? See how they both say bearish at the top here? The 4 hour and the 1 hour. So if your bias is looking for shorts and you see that, that just gives you that extra confidence to put in the trade. Okay. We have fair value gaps at the top. We have a fair value gap here that it's currently in. So if we draw it up, there to there, it's been tested and respected now a few times. So if this inverses this fair value gap, then we are definitely coming up to this one, and then to that one, and so on and so on, right? We go to the hourly. We know we're delivering or testing from a 4 hour. We're now seeing an hourly fair value gap being tested, and we'll see what happens from there. 15 minutes. We've taken Asia lows. We've retested the London lows inside a 4 hour fair value gap. We then shot up, inversing this fair value gap and this one. Small market structure shift. This could be a long. So it's not an official call out, but if price comes back up to this level, there. See how it's come down to test this 15 minutes again, and then it shot up. Even the next candle's good, so I'd be comfortable actually entering there. Stop loss at the lows for a big trade. All the way back up. Previous day highs. That's where we want to get to. And the reason for this confidence, guys, is this is Asia. We moved down. This is London. We accumulated. Okay. We then started to push up a bit for London. Right. Respected a fair value gap. We came down. We took London again. We took the liquidity in London. Right. When we took the liquidity in London, this would have actually been the trade right there. See this inverse here? Boom. Stop below the lows. Technically, that should have been the entry. Look at the risk to reward compared to this one. Okay, so we just hadn't started streaming by then and we hadn't started looking at the charts. But if that's what we were seeing now, that's what I would be in right there. So then we push up. We take the London highs again. We then come down, retrace into a fair value gap that we're now delivering from, a 15 minutes. And there's a strong green candle up, guys. That is telling me that this delivery from the fair value gap is now picking a direction to go up. It wants to take Asia highs. It wants to go possibly back to the previous day lows. And hopefully at Asia highs or at this level here, we can go to break even and be a risk-free trade. Okay, so that's Euro. Even though both of this says bearish, the way it's delivering from a fair value gap, higher time frame fair value gap, that's what I would kind of look at. Remember what I said. If we're looking for longs on Euro, then typically we're looking for shorts on GBP JPY, even though it says bullish. Okay. If you look at the 15, I thought it would be a better one on the 15. Let's look at the 3. Let's look at the 2. Let's look at the 1. You can find trades on any time frame if you look hard enough. So we have a market structure shift. Okay, so showing signs of longs on GBP JPY. That inversed, came down. I did say it's not always perfect, guys. Our gold trade seems to be working in the direction. We've now entered it. Well, haven't entered, but I've done 2 call outs, 1 gold and 1 euro. CISPX is just going sideways. It's basically delivering from a fair value gap. Let's look at NASDAQ. NASDAQ there. Let's look for, okay. So this is interesting, guys. Look at this. There to there. SMT. Okay, from there to there. What does this mean? This means that one of the pairs are slightly stronger than the other pair. So ES is stronger than NASDAQ. Okay? So when you see this happening, see how from there to there, there's nothing. It's the same, right? More or less. That's what you want to see going forward. But when you see these SMTs, that is when you need to anticipate longs. You need to anticipate longs, especially if you go like this and this, and you see that we're delivering from this area here. So longs is what I am looking for in terms of NASDAQ right now. Okay, let's look at the fibs on ES. Okay, ES didn't come down as far with the fibs. So if you look at NASDAQ, this is what Khan likes to trade all the time. He'll go from the top to the bottom of London, for example. And as you can see, there's a fair value gap right here. Okay? Where is that fair value gap? Exactly where the 0.786, the OTE level, right? I say golden pocket, he says OTE level, right? So once it bounced off that level, which we've seen so many times, it'll slowly make its way up. Now, it could respect this fair value gap or the one above it and just start melting down. Because remember, we have a massive fair value gap here that has been tested before. That is a strong draw in liquidity, which is previous day lows as well, which is down here. So there's no reason it has to always go up when you see this. I'm just telling you his entry style and what he looks for, okay? He would be able to tell you the same, but he barely comes online these days for trading. Yeah, I knew you were listening. That's why I started talking about you. You fell into my trap, bruh. I got you. I should have said something like, yeah, he's a little bit like useless when it comes to doing this. Hey, you would have came in the comment section. What? You're talking about me? You're talking about me? Yeah, bro. I know you. Anyway, like I was saying, this is the one strategy that I will dabble in, okay? Which is on the first one, if you see where I drew up the... That's the... what's your official name for your strategy, Khan? I call it the RCT Market Structure Shift strategy. Maybe that's incorrect, but that's what I associate it with. Or you could say the Fibonacci OTE strategy or something like that. Or regardless, there's an SMT. It's delivering from a fair value gap on the 15 minutes. Okay. Is that on the 5 minute? My bad. And there is liquidity higher up. So this is interesting. So let's look at our gold. Okay, gold, even though it broke below, there's a market structure shift here, right? And the AMD setup looks good here. We are still at all-time highs. There's no rule saying it has to come down. So everything's bullish at this point. So this is a long shot, but it's at least it's fitting a bunch of criteria. And one of the criteria is if you look on the 15, for example. Okay, let's break this down, guys. This wick here might be the only thing that's concerning on this trade. Why did I draw up this as a short? Let's break it down. Okay, so what's working against us on this trade is the fact that we are at all-time highs and we're trending upwards. As you can see, I could literally do that. We're trending upwards, right? That's the thing that's working against us on this trade. Market maker model. There you go. Market maker model. Triple M. So the thing that's working against us on this trade, and the thing that will be the reason why this trade doesn't work, is because we're trending upwards and we're at all-time highs. Okay, and I wanted a more clear market structure shift. So that's the negative things out the way. The positive things on the 15 minutes is that we have accumulation, we have manipulation up to take all these stop losses above that we're anticipating shorts. So it swept all of it. It left a fair value gap on the way up, right? And it came down, it inversed once over there. It came down almost inverse. Is a technical close inverse there, but it really did it over here. Okay, so not the most convincing inverse because of those two gaps, but it is still an inverse. Market structure shift, a little bit of a market structure shift. I'd love it to be more convincing. And then it did come up again, which is like I said in the model with the AMD model, you can either enter straight away, stop loss above the high, or you can wait for the retracement up into the fair value gap area again for extra confluence, which you would have to do in this case. You actually would have to, because we are at all-time highs and because we're trending upwards. This is a have to. This is non-negotiable at this point. If this was happening on a different pair and it was just in an area that was a very good area to trade, previous day highs, but it's not all-time highs, then you could have got away with entering somewhere here. So there's the retracement back up. It did not close above. Okay, so it respected the fair value gap and then started to push down again. Okay, so we enter, we got stop loss above all-time highs in case it does come back up to test this breaker block area or this all-time high. Then we might stay in the trade. And then we target Asia lows. So you could take this trade. You don't have to take this trade. In fact, a lot of times if you take the opposite trade to me, then you walk away as a winner. So I'm not telling you guys to do anything that you have to do. This is just my own opinions, and this could very well be a losing trade, but this is the reason why I'm taking this, well, I'm calling out the setup. Okay, just to clarify, that's why I'm doing it. Why did we get into euro? Let's break it down again. Higher time frame fair value gap is respected. We have created London lows. We then swept up, came back down, took the London lows again. We respected the fair value gap again. We started to push up, 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 up. We take a little bit of London highs. We then come down into a fair value gap on the 15 minutes. We respect it, and there's a strong green candle upwards. And now we're coming back down, and that's why we enter, is because of the strong green candle delivering from a higher time frame fair value gap and a 15-minute fair value gap. So this could very well just test these Asia highs and then decide to continue moving down. It could do that. That's why trading is so exciting these days. And you would need a wider stop on this trade. So you would need to go to the lows here, because we've now gone there twice. So it might want to come back down, test these fair value gaps here, and you just don't want to get stopped out. Okay, everybody on the same page? Let's look at NASDAQ. Okay, we said that we were looking at this for a long because of the S&T and because of delivering from the OTE level on the Fibonacci retracement. So NASDAQ, if you were really into that strategy, you could have entered like this and put a limit order here. Okay, at this area somewhere. So let's say you put it there and you put your stop below there, and this would have been your trade like that. That's if you got balls of steel. That would have been the trade right there. So by now you'd be at break even and it would be risk free. But we didn't see that and call it out live, so we don't count it. But that is basically what you would look for. Top of bottom Asia, top of Asia, you draw your Fibonacci tool, and the OTE level, or the golden pocket area, is a 786 level, and you basically make sure that there's a fair value gap at that level. And if it comes down and taps that fair value gap and reacts from it, a lot of times even if you just did that, a lot of times you would actually win that trade. AUD USD is very interesting. We didn't actually look at that. Look, okay, let me explain something, guys. What did we just do? Right? We just did this, okay? Boom, boom. What is this? 0.786, okay? We literally just spoke about this. The only difference is, what's the only difference? I'm pretty sure, like, once I've got a couple hundred people in chat and they all like talking non-stop about what's happening on my charts, I'd be able to ask this question: what is the difference between what we've just spoken about and this trade? And the answer is, let's first look on the 15. Nope. Let's look on the 3. Okay, almost. Let's look at the 2. So the smaller time frames, you could maybe get away with it, but the difference that we've just spoken about is what? Is the fact that there's no fair value gap here that it's delivering from. That's the only difference. It went from the bottom of London to the top of London. We then came down into the OTE level, or the golden pocket area. It reacted from this level. Okay. It pushed up, 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 and now it's come down to retest that level again. And now, so let's say you entered this. Again, if you had balls of steel, you see the reaction going up and you say, I'm in. Okay, stop loss below the lows. You would have got your trade already. Look at this. Okay, let's say you only used the strategy and you only looked at the OTE level and you only looked at the market maker model, right, which is Khan's model that he looks at. I've just shown you two pairs, right? Nasdaq and AUD. Now, granted, Nasdaq was a better trade. Why was it better? Okay, or better setup, I should say. It's because there's an SMT. It's delivering from a fair value gap. The only thing that'll stop this trade is that these fair value gaps could come into play. And if they do, and it respects from it like it's doing now, then, oh well. The signs are there, everything's there, but it didn't work. Whereas this one, but you see, even with this one, identical, right? It goes up, fair value gap, comes down. What do we see here? Okay, goes up, fair value gap, comes down. When it comes down and it's taken enough here, it's going to shoot up. Because it came down, it took enough, and then it shot up. It's all pattern recognition, guys. That's all it is. These are live charts. It's another thing I need to emphasize, is that I will never do a recording of previous day charts and take away a bunch of candles and start from here and go, okay, let's see what happens. I already know what happens. Look, I already know it goes up. So to take all these candles away and then go over here and then go, oh, let's see what happens. And I draw my trade out and I push play. And I see a bunch of candles do this. See? 1:3. Done. Like, you know what I mean? That's just stupid. I'm going to take this away. This was purely for demonstration purposes. This was not a live call out because we were not here to do a live call out. I'm merely explaining why this trade worked like it did. And the fact that Nasdaq theoretically should do the same. If it doesn't, it doesn't. But ultimately, I'm expecting it to go back up. Okay. I haven't looked at news today, guys. I have not looked at news today, so let's have a look. Economic calendar. Not much. 2 o'clock. FOMC minutes at 2 o'clock. Crude oil imports. So crude oil, gasoline. Okay, so those are the pairs we aren't trading right now. Okay. So not much happening in the way of news, right? So Let's do this one more time, guys. Typically, AMD looks like this. Let's do the pathing. AMD looks like this. Accumulation. I'm going to do small. I'm going to do this because price action is not always identical and doesn't always look the same. Okay. All right. Let's say this is accumulation. Right? It's going to be messy. It's going to be choppy. It's not going to look identical. A lot of people will draw identical lines and be this. When you see this, this is accumulation. Like, no. Accumulation is nasty. It doesn't have to be identical. It doesn't have to be perfect. As long as it's in the same direction and going sideways. So sometimes there'll be bigger candles, sometimes there'll be smaller candles. As long as it's going in one direction sideways and it hasn't gone up or down significantly. So if you see this, boom. Okay. Let me get a new one. So pathing. From here, I see manipulation up like this. And then I see inverse. Okay. Now let's stop there. What we need to see now is some form of liquidity being taken like this, right? And ideally you'd want to see either something like this happen. Okay? This is A plus. Let me explain something to you. This is A plus. Okay? If you see a higher time frame, the 15-minute, the hourly, the 4-hourly, being respected like this, and you're on the 5-minute chart looking at this, and this is previous day high, this line here is previous day high, or it's a bunch of, like it's a high from a previous, like external liquidity, okay? So if you see this, and on the way up, let's say on the way up it does this, it leaves a fair value gap like this. Okay. Let's say there. Okay. Let's say you see this. There's two ways to do this. You can either enter right there at the close, right? And inverse the fair value gap, but you enter. Stop loss either above the fair value gap or at the highs. Those are your two options, okay? Above the fair value gap or the highs. So in other words, it will look like this. It'll either be like that, there, or it'll be there. Okay? That is so big. But let's just say we are targeting all the way down here. Then all of a sudden it doesn't look that big. Okay? It's just perspective. It's just because I've zoomed in and that's, yeah. So let's say that's what we're targeting. If this is too big, you can consciously make the decision to do this. And that way, you shorten your stop loss. Right? Now, what do I mean by this? I mean that if we wait for price to come up, tap this area again, and then go down. Right. This is the distribution phase. We are trying to catch a optimum entry, and you can either try on the smaller time frame or you can go to the 5-minute. This is the 15. Well, I'm on the 15, but it doesn't really matter. let's say this is the 5 minute, okay? You come back up, we test it, and we come back down. That's the AMD strategy. You can either enter at the close after the fair value gap, or you wait for the retest. It's that simple. Now you're asking why. Why does this work the way it does? Picture this, okay, like this, and now picture a bunch of them. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Picture all of this. Picture all of this, right? 100, 100, 100, 100, 100, 100, 100, 100, 100. A bunch of people doing this all for this whole time. Okay? Possibly even thousands of entries like this, right? Look at one common factor, right? Is that over here, above here, is breasting a bunch of people's stop losses. This candle here sweeps all of those stop losses, takes them out, right? It then delivers from a higher time frame value gap. That even could be a 5 minute. It doesn't have to be a 15 or an hour, but ideally a 15 minute or an hour. We sweep liquidity. That is the most important thing. We sweep liquidity. We then shoot down and inverse a fair value gap. We then come back up to test that area again. We enter, which you could wait for more confirmation. You could wait for a red candle and enter down here somewhere. The entry is entirely up to you. Entirely up to you. Let's say that's your entry. Okay? You target a 1:3. There, you're done. You're done, right? It doesn't always work. It's not 100% foolproof. No strategy on earth is 100%. Okay? But a lot of times you will see this pattern form, this accumulation, manipulation up into a fair value gap and a liquidity sweep. It'll inverse a fair value gap and it will go. Right? I'm not expecting this trade to be a winning trade like crazy, right? If anything, it would come down to this level or whatever, and then either reverse up for break even. The reason why I drew this out is because this is accumulation, manipulation, we've just spoken about it. But what is different here, guys? What is different? Is there liquidity that it's up here taking? No. Okay? Is there a fair value gap like this that it's respecting? No. Okay? So remember what I said when I drew up this this trade. I said there's a few reasons why this trade, if it doesn't work, that is one of the reasons. Number one, what I just drew up there is one of the reasons. Number two, we are in an uptrend. Okay? And there's nothing to the left to compare it to. Right? And also number three, we've taken previous day highs. So there's nothing left. That's why this trade is failing. This is not an A+ setup. Whoever's going to watch this on repeat, or if you stumble across this and you've been curious about trading, or you've been doing the accumulation strategy or the power of three strategy or the AMD strategy, and you don't know why your trades are not working, there are certain criteria that must be met. Okay? I drew up this trade because I really wanted it to work. I have not entered into a trade. I'm just saying this is a possibility because of certain factors. This would have been, even if it won, it would have been a B setup at best. At best. Maybe not even a B setup, a C setup. Simply because there's no liquidity swept at all. besides London highs, which is the accumulation part. I'm talking about the like external liquidity to the left. There's no liquidity sweep, right? There's no fair value gap that this is delivering from at all, right? There's two fair value gaps here, right? So ideally, if you look on the 30 maybe, no. So that is why this is coming back up, because it's just it's gold. Gold is just going to pump. Okay, so I've gone through AMD with you guys. I'm going to go on a different pair. Let's see Euro. Now, why is Euro working better than gold? It's because, and not to say that this is going to work, but why do we have a little bit more confidence in Euro? Because we are delivering from a fair value gap. We came down to sweep liquidity again. We've inversed the fair value gaps we had our eyes on. We then respected a fair value gap here. Okay. And we delivered fast and strong out of that fair value gap. That is why we have a little bit more confidence in this one, right? AUD would have been good if we saw it, right? We didn't see it. NASDAQ. Okay. At this point, guys, like, these call-outs, let's say we stuck looking at this, okay? And I said to you, okay, and you entered here. Boom, right? Stop loss below the fair value gap because now it's been tested and you're comfortable. This is our trade. Okay, we talked this up so much. I even said to you guys when it was here and it started to move down a little bit, I said, look at AUD and look what happened. I said it did exactly the same thing. It hit that area, which is the fair value gap. It came down, and when you feel it were comfortable and has taken enough, it reverses. What did NASDAQ do? Got to the fair value gap, came down, felt comfortable enough, it took enough, and now it's going up. Right. So if you were listening and you decided to take this trade based on what I was saying, this is where you would enter, right? So that we're going to leave this trade up like this and see what happens. So that's one. Gold, we're probably going to lose. Mind you, we're still in this trade. Okay, but we will see. See how it has inversed the fair value gap. So it's all, I would say there's a 70 or 80% chance that this will come up and stop us out. Okay, so we've got in terms of call outs, we've done Euro, we've done gold, and we've done NASDAQ. So that's 3. Okay. Let's see out of these 3 what happens. I still think gold is we're gonna lose gold, and I'm really hoping that the other 2 are winning trades. So far, that is my analysis on the markets before 9:30 open. Okay. I would love questions, but I don't have enough people in my chat for that. Thank goodness this is all recorded, guys, and it'll stay on my Kick channel. And if anybody wants to listen to the recording, they get educational material. They literally get golden nuggets from time to time. And if they watch it over and over, and they watch the setups that we go through, and the types of setups that we talk about, and the strategies that we talk about, then they could make up their minds, or even it'll help them in their trading. Remember, I don't claim to be a pro trader here, guys. I don't claim to be an amazing, godlike, I don't know how else to say it. I don't claim to be that person that you might think that I am. Right? I am on a journey the same way you are. If you are here to learn about trading, I've been on that journey for over 4 years now. The amount of pain and suffering that I've gone through on that journey has allowed me to talk to you guys like this. It has allowed me to sit here confidently and comfortably enough to say, this is my experience, this is my chart time, and this is what I think will happen in the markets now. You can choose to listen to it. You can choose to ignore it. You can call me a dickhead. You can say I don't know what I'm talking about. You can say anything you want. I don't care. I am giving you my opinion on what I think is about to happen in the markets. And that opinion could be completely wrong. But it's still my opinion. And there are a lot of people out there that do what I do in front of a camera, who you can go and find, who's a perfect little angel, who never swears, who's all exciting, who's got 100 to 200 to 500 people in his chat, and who's got tons of money, who's rich, famous, and you can follow that person. I don't give a fuck. Every day from Monday to Friday, I'm going to be in front of this camera, or I'll be on this live talking about my experience and my trading experience. That is just what's going to happen. Look at NASDAQ. NASDAQ was a no-brainer. Okay? Look at gold. Gold is now moving in the right direction. Look at euro. Pumped up. Now it's creating a candle that we don't really want to see. Look at this indicator, why it's so important, guys. We are moving up and we are testing an hourly fair value gap to the left here. Okay? These red candles is here. That's Asia. The only way for this trade to work is to close here, above this fair value gap here. Previous day low. Close above the previous day low, and it's GG. It's GG at that point. Right? Because even on the 4 hour, close above this, it's testing a 4 hour and it's testing a 1 hour. So there is no rule that says this has to go up now. It's testing a 1 hour fair value gap, it's testing a 4 hour fair value gap, and it's respecting it. There's literally no rule that says it has to go up. In fact, long term, it probably looks as if it's going to go down because it's on a downward trend, right? So this trade is actually going to probably work against us. We're going to probably lose this one. But you know what? We're going to just stick with it and see. Okay, so this NASDAQ trade, you would be at break even right now. Right? You would definitely be at break even if you took this. because it's now taking those highs here. It's respecting a fair value gap and taking the highs at the same time. So you don't know if it's going to now start dumping. You don't. And it's not your job to be a predictor of the markets. It's your job to read patterns and use your pattern recognition to identify setups that follow the patterns that you have sat in front of the chart and recognized over and over again. That's your job. If I make it, let me make it a bit of a more simple analogy for everyone to understand. Okay? If I'm a truck driver, okay, and I drive a truck every day, and I start looking at the way a certain car moves that's next to me, in front of me, to the left of me, and I've seen a car act like that 100 times before, and before whatever happens to that car happens, I say to the guy next to me, watch this car in the red, yeah, watch this red car. I bet you he's going to come into this lane. And all of a sudden, within 10 seconds of you saying that, that red car indicates and it turns into your lane. How did you know that red car was going to turn in your lane? You are not in that red car. You are not driving that red car. You don't know what that red car is going to do. It could have went to the other lane. It could have just carried on straight in the same lane. But what made you say that that red car is going to turn into your lane? It's because you've seen and witnessed it happening so many times that it actually becomes second nature. It becomes pattern recognition. And you basically are saying that based on the 100 times that I've seen this happen, I would say 70% of the time, or even 80% of the time, the red car turns into my lane. Do you see? That's all this is. That is all this is. It's that simple. It's not even a gotcha moment. It's not even a moment of, oh shit, like, what does he mean? Is he trying to get all complicated with me? No. That is how simple this is. That is all it is pattern recognition. Based on the patterns of this trade, when this candle came down and reacted from this fair value gap and shot up like that, at the OTE level, at the golden pocket level, there's a fair value gap. And it moved up into this fair value gap and reacted down from that fair value gap. Based on the patterns that we have seen over and over again, this will come down a little bit and then it will start going up. That's all it is. If it meets certain requirements and it meets certain criteria, you've just got to be, this is how you've got to be robotic. It's got to be boring and robotic. Because you've got to be like, I'm seeing an SMT, I'm seeing a fair value gap be respected, it's hit the OTE level, or the golden pocket level, whatever. It came up, there's a strong reaction up. It even tested a fair value gap and came down a little bit, which we saw happen to AUD here. Tested a fair value gap, after hitting the OTE level, came down, then reacted and went up. This is exactly what we've just seen before it happened. Okay? And because it's pattern recognition, and because it happens so often, even if this did not work, and this did not do what it just did, okay? And you can manage your trade however you want. You could say, I'm a 1 to 2 trader. And when it got to here, boom, I'm out. Which means this would have been a winning trade for you. Or you can hold it to a 1 to 3, which is up here somewhere. Okay? And you can say, I'm waiting for it to get to London highs. Okay? Or there are people out there that'll just do this. I'll go 1 to 1. There. That's all I wanted. This little push up is all I was interested in. That's the difference. So this is a winning trade no matter what happens now. Because the people that go 1 to 1 would have won. The people that go 1 to 2 would have won. It's only the people that would have gone 1 to 3 now that are sitting and waiting. I hope I'm making it extremely clear for you guys, if whoever's listening. My job here is to try and make things click. Because I could talk to you about an hour long stories about my mindsets, the way I was thinking in the background, the last 2-3 years, how my brain has worked in regards to trading, how I used to say this time is the best. Like I know exactly what's going on now. I've done this, I've done that. I'm changing my ways. I'm changing the way I do things. I will get Khan on here one day and I'll get him to explain how many times I've said that, oh no, I'm just going to change the way I trade now. I'm just going to change this. I'm just going to change that, right? I have changed my strategy so often that it is ridiculous. So either you should be out of this trade and take your winnings and leave, or you have your stop at break even, you've taken partials, and now you're ready to just let it ride. This trade, you could either get out now at break even because volume is coming in the markets, or you can see what happens. Our gold trade turning out to be a banger, okay? Okay, so we almost got stopped out here. And then let's see what happens to gold now. Wow, look at that. Look at that. We're coming for Asia highs. Okay, there's a lot of room from where it is now to previous day high. This target here is a very important target. Okay. Boom, there's a win. Okay, so we type in your win. Okay. That's a win. Let's put an emoji. And we go like this. Okay. There's a win, right? Euro, we don't know yet. Gold, we don't know yet. This is playing games at the moment, right? So you can then now make the decision whether you want to hold on to this or not. This is still 50-50 at this point, right? As I said, there's too many ways that this might not work. It's 50-50, this trade. Hey, bro, did you take that? You didn't. I was going to ask if you took this. Hey, bro, Nasdaq was Juicy, juicy. Reason why I'm sending Khan a message about Nasdaq is, and I know he probably wouldn't have taken this because it's before his trading time. Okay, those that held runners, it's inside the higher time frame value gap. But this would have been our win for the day if we took it. This one I'm not too sure about. The reason why I'm not sure about it is because you have a hourly fair value gap here and a 4-hour fair value gap here, and both of them are being respected. So until this inverses, this is not a safe trade. You on the charts today, bruh, or not? Just a couple of setups there that I've talked about and called out. Okay, you have a decision to make at this point. I would go to break even if I was in this gold trade. Okay, simply because I know there's a fair value gap coming up here, right? An hourly. There, I know this fair value gap is what's coming up here. Anything can happen at this level here. So I would be at break even because number one, this is not an A plus setup to start with. In my view, this is a B setup, okay? But it's still a setup. So your one-to-one traders are already out. They've got their money and they've left. Okay. I explained it on my live, bro. I said there's an SMT that formed, and the fib from the bottom of the London to the top of London, so the OTE level or the golden pocket level, there's a fair value gap at that level. It then tapped in that fair value gap perfectly. It went up into the first fair value gap, and then as it came down and showed signs of moving up, then you enter. I saw the exact same pattern happen in AUD USD, identical pattern. So that was the reasoning behind it, or some of the reasoning. I explained it on my live. So this was the trade of the day, guys. This Nasdaq trade. If you're still holding a runner, that's 1 to 4, 1 to 5. So I explained why you would enter into this trade and where you should enter into this trade as it was happening. This might not have been the perfect entry for you. Maybe you entered on this candle here. So maybe you waited until you saw that. Okay. That's still okay. But at this level would have been fine as well. Okay, so that was a very good call out. Gold, we don't like this wick. So if you didn't take a 1-to-1 trade on this, I would be at break even now. And if it stops me out at break even, then I'd go, oh well, it's a break even trade. So if you did not get the chance to take partials or to take your 1-to-1 trade completely out, I would be at break even by now, at 100% at break even. And I would accept the fact that if this trade came back up and stopped me out, I would accept that that is a break even trade and move on. Look at that reaction from Nasdaq, and you don't see the same type of thing from ES. Nasdaq is much stronger than ES. ES is a lot weaker than Nasdaq right now. The pairs are not as correlated as they should, which means that this is a very important fair value gap right now. Okay? That means this 4-hour fair value gap is huge right now, guys. Why do I say that? It's now respecting the 4-hour fair value gap on both ends. And ES is super weak. Super weak. Look at this. There might not be the biggest SMT formed. Alright. There. But the respect respect of the fair value gap is crazy, guys. If you drop down to the 2-minute, this is where a lot of people are doing inverse fair value gap strategies right there, guys. Right here. This is where the short would have happened right there. Stop at the high and you take it down low. I didn't look at this clean enough, but why is this important, guys? It first came up into the fair value gap, came down. Then went through, took this into the 4-hour fair value gap. ES weak. Right? Is there an SMT? Let's see if I'm wrong with this one. But this is where a lot of guys would have gone break even here, which there wasn't a chance. And the reason why the inverse fair value gap strategy would have been decent here, whether it works or not, is because it's delivering from a higher time frame fair value gap. Okay. It now inversed this fair value gap on the 1-minute, right? And it looks like it might want to. There's another small 1-minute fair value gap. It's inversed it. Okay, so now we're going to come back up. Probably going to come up and take this out here, because you've inversed this fair value gap now. But a lot of inverse fair value gap specialists and people that take trades would have looked at this and gone, ES is super weak, which is what it was. Look, it's just started dumping. Okay, ES is weak. We're delivering from a 4-hour. We've inversed the first and only fair value gap here, which is the 1-minute. Right? It's a risky trade because it's the first and only fair value gap as we start pushing up. And then you go stop to break even here. But this one's going to be a losing one, I can bet you now. Which is interesting. So this went down. Let me just see if there's SMT. Yeah. So SMT formed there. Okay, cool. Makes sense. So we caught the first move up, right? We caught all that up. That would have been 1 to 3. We would have lost this one. Okay, so that's a loss. So we put an L. L. Okay. Change the color. L. That was there. Yeah, there. Okay. This would have been an L. Okay. Remember what I said, guys, the indicator, there's the entry, there's a stop loss, and there's a take profit up here. So the indicator tells you where to enter. Okay, let's look at ES. ES is now recovering from being weak. It's now recovering. Why do I have these lines here? Not sure why I have these lines. Okay. taking out liquidity. Interesting. Okay, this trade, as I said, guys, I'm not too happy about this one because of the price action. But I'm going to leave it up here in case anyone did enter. But I would have got out of this one already. Gold, I'd be at break even. People could have taken the one-to-one trade there. We do a little chilling. We do a little chilling. Okay, so I've spoken on this about other lives before, okay? That when you see this first initial pullback from the middle of the fair value gap, a lot of times it'll come up again to sweep that first initial liquidity area. So now that it's done that, now you wait for a market structure shift back into the breaker block area, preferably with the fair value gap here, and you look for the short. That's what you would look for if you were looking for shorts. If you're looking for longs, you wait for the close above here and maybe a retest down, and then you can look for longs. Depends on you as the individual as to what you decide to do. PX. Okay. What are we doing here? What are we doing? Either this is going to be a break-even trade, or it would have been a win for some people that would have taken a one-to-one. One of the two, guys. One of the two. This looks interesting. AUD. Swept liquidity. Fair value gap that it's respecting. right? 5-minute fair value gap here. Look at the smaller time frame. This is what I mean, guys. Sometimes it does it, sometimes it doesn't. Okay? This would have been your trade right there. Short, stop above the highs or the fair value gap area, and you would make your way down. But this is now after the fact, so it's not really a valid trade that we have looked at. I'm just drawing up what you guys could look for if you were looking at the inverse fair value gap strategy. Okay? See how there's multiple fair value gaps down here? That's what we don't really want to see. We go to the 5 minutes. The 5 minutes, if you see, if this inversed the 5 minute, created a fair value gap, then came up and did what it just did now, you can enter on the retest of the small fair value gap. You can enter. But because it's also respected this fair value gap, it needs to disrespect it for it to be a more valid trade. Okay. Okay, so our second NASDAQ trade was a complete misjudge of what, or misread the room, basically. So it looks like the opposite is true here. Okay. So what you would look for, let's just get rid of that. Okay. Is ideally there would be a fair value gap here. And if that respected off the fair value gap, which it kind of did actually. What am I saying? What am I saying? There is a fair value gap. Okay, now that I'm seeing this, it's making a little bit more sense. Yes, this is the fair value gap. However, here's a fair value gap. Okay, so in other words, if you inverse this fair value gap here, stop below this candle here, you could go up. Now that I'm reviewing this, it makes more sense, guys. This is why I do this, is to review trades, is to look at them from a different perspective. And I did not initially see that this was the fair value gap that it was delivering from. I saw there was no fair value gap. I didn't really put two and two together. So upon seeing this, it makes a lot more sense. Okay. So it's respecting of a fair value gap. You then inverse and you ride it up to a 1 is to 2.5, or 1 to 2. 1 to 2 is there. You'd be in and out this trade so fast. Done, dusted. Damn, we missed this one. Okay. We would have technically still been in a trade if we had just kept a runner this whole time. So if you kept a runner, you would be at 1 to 6.4. Okay, so this we missed. And we decided to go the opposite way because we thought that it respected the fair value gap. Okay, so that was a trade. Boom. Okay. We delivered off this 1 minute. We inversed this 1 minute. And we took it. Let's look at the 1 minute here. See, it's just so weak. Oh, hello. Never mind. The two trades of the day are NASDAQ, guys. NASDAQ were the two trades. One down here and another long here. Those were the two trades. We called out the one. We didn't call out the other. In fact, we lost that one. I would have been out of euro anyway because look at where it is. It's just stalling. Okay. Gold, we called a 1-to-1 trade there, so people would have, this would have been break even. Okay, so depending on, I can't conclusively say that euro was a good trade or not because I'm out of euro. Okay, but if you did enter there, your stop loss needs to be up here, Asia highs or something. Personally, I would be out of euro now, which means it would have been a break-even trade. So let's say break-even. For me, if I'm really honest, if I'm being honest, gold was 50-50 and would have been a break-even for me personally, but a win for somebody else because it went 1-to-1. Okay. Massive win over here for NASDAQ. Somebody took that in the world and made a killing off it. Make things really clear, guys. This strategy here, even though I don't know if Khan himself would have taken it, a lot of the times that strategy is what he would do with gold. If gold presents itself a certain way, like that, then he looks at an entry. I love doing this. And the reason why I like doing this is because it's live. It's not recorded. So if people do watch this live, obviously if you're watching it on recording, you're not going to believe it because it's going to be, you're going to be like, oh, this is a recording. Like, yes, it's recording because it's recording the live. So we spoke about the entering this trade. So if you did, well done. You got a good win. This was the trade of the day, right? The second trade of the day was this one. NASDAQ for a continuation trade, right? So that was the second one. Let me actually draw it in there so that you guys can see. So this would have been the trade there. Inverse. That would have been the stop loss that I would have chosen. 1 to 4. Okay. So those are the two trades that would have done extremely well today with NASDAQ. Gold would have been break even or 1-to-1. Okay. Nobody who to enter this trade should still be in this trade. So that's 2 out of 3 so far. 2 winning trades, 1 losing trade. We did not call out this trade because we didn't see it happening live. But if you did take this, there's a 1-to-2 there, so you would have, that would have been a W. Why did I call this one out? Let's see. Okay, the 3-minute was the reason. Came up, retest, down. Yeah, but oh well, we'll see. 2 out of 3 is still very good, guys, because the first trade would have been a 1-to-3. Let's say, and I know for me personally, would have been a 1-to-3, and I would have maybe held a little runner. So it would have been still going, so 1-to-6 with the runner. Then I would have lost a trade. So let's say I got 1-to-4 in total. Take 1 out, so it'll be 1-to-3. And then I got a break even or 1-to-1. So looking at at least a 1-to-3 for the day. And that's okay in my book, guys. That's okay. That is, in fact, that would be the goal. The goal would be to win 2, lose 1, and call it a day. If you can call out 2 good trades and 1 bad trade, and say to yourself, when you lose, then you're done, then how do you not, like, you know what I mean? Like, it's, surely you'd be able to make it work if you could do that. Also, guys, when it comes to this type of trading, guys, it's more, it's a lot to do with me learning as well. Like, I haven't placed the trade in a while simply because I want to do call outs, and if I start doing extremely well with call outs, then I want to put trades behind the call outs. As I'm calling it out, I put the trade. As I put the trade, everything's good after that. It's the fear of putting a trade when you think that this could potentially do this and could potentially do that. But like I said, based on pattern recognition, shouldn't be a problem. My entire mindset now, today, when it comes to trading, has completely shifted. I used to be very erratic. I used to be very impatient. I used to be very forceful with the trades. I used to need to trade. I used to had no choice but to trade. And my mindset now is, okay, I'm going to call out some trades. If it makes sense, then yes. If it doesn't make sense, even a little bit, then no. And there's rules and criteria that must be met. And when you start seeing things like SMTs and stuff like that, then you know. Right, guys, like today I had a good stream on TikTok. Because what I normally do is I will stream on TikTok for an hour and a half. Then I'll have an hour break. And then I'll come and stream on Kick for a couple of hours. Like 3 to 4 hours. So that's between 5 and 6 hours of streaming a day. I think that's a decent amount. I think Euro is also waiting to be exploded. Waiting. Respecting this fair value gap, but if it inverses this fair value gap, it's just going to explode all the way up. But because it's accumulating a lot here, there's a possibility of pushing up, taking Asia highs, creating a fair value gap, inversing it on the way down, and just dumping like a stone. So this one you have to just wait. See how this is going up? This is probably going to come down now. So this could come down, respect this fair value gap, create a fair value gap on the way down, and then just inverse it and go up. I can't wait for there to be lots of questions in the chat. Hey, Viking, can you explain this? Yeah, sure, no problem. Hey, Viking, I didn't understand when you said this. What do you mean by that? Well, good question. This is what I meant. Boom, 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 boom. That'll be pretty cool. Well, this one was a win or a break-even trade. No matter which one you took, it's still not a loss. Not that it's a loss now, but you should not be in this trade right now. At all. If you entered into this trade and you are still holding and now it's in drawdown, unfortunately, that's just the way it is. But you should not be in this trade right now. If you need to enter into a gold trade, then you need to wait for a market structure shift again and then enter. Okay. So the retest here was good as well. So if it came up retested, this fair value gap was decent. This retest here on the 50% line in another fair value gap. So if you missed this entry, you could have entered on the candle coming off this fair value gap. There's so many ways you could have entered here. I just hope someone caught this live. I don't know. I'd be at break even by now with this trade. You've got fair value gaps to the left here, and it needs to close through them. You could use the 15-minute here. So in 14 minutes, if this candle closes here, I'll draw the line. This candle closes here somewhere, then you'll be able to take a short, stop loss over here, and all the way down. Hey, I've had almost no engagement in my chat today. What is going on, guys? Normally there's a few people chatting. There's nobody now. But this is not going to be a long stream today, guys, because this is just meant to be a educational type of stream, a chilling, chatting, learning stream. Call outs. We've completed our call outs for the day. You could have included this one into it, but I'm not going to. I would say that if the 15 closes here, where this wick is, you could put an entry there, stop loss maybe above this candle or above the fair value gap, but a decent way away. And then you enter a new target, either this fair value gap or the liquidity just below it. So it would look something like this. There, stop loss here, probably there, targeting there for a 1 to 2. That's what it would look like. Hypothetically, there's still 11, 12 minutes. So anything can happen. But the earlier entry on the 3-minute, I think it was, it would break, retest, fair value gap, break. Here it breaks the breaker block into the fair value gap area. As it starts to move down, you can enter like they're just there. How long have I been streaming for? 2 hours. What's the time? Yeah. Another 15 minutes, 10:30, somewhere around there, then I'll call it. A lot of times, the 4 hour, where's the 4 hour? 4 hour candle. Just go here, it's a 4 hour candle. Is it okay, the start of the wick is here. It closed above. See how it closed above on the 4 hour fair value gap? Which means we're probably coming up to these highs here, or these highs, or this is the previous day high, isn't it? Yeah. Probably targeting previous day highs, guys. Just so you know. That's my opinion. So we're looking at either a retest of this fair value gap, and then we're going to move up, take this level. Otherwise, let's look at the 15. Let's look at the 2, the 1. We have inverse the 4 hour. We inverse the 4 hour. Inverse the hour. There. We could respect this hour here. And if that's the case, you look for a short down. But I don't know, guys. If you caught this one or this one, you don't need to trade. This is something that's very important, guys. Please, for the love of God. If you took this trade when I was talking and you entered there or somewhere near there and you've held it all the way up, or you've taken a 1:3 and you're happy, you've made, let's say, $500 or you've made $300, whatever, right? And that's your target for the day. You don't need to guess whether this is going to inverse and come down or it's going to respect and go up to the previous day high. You don't need to, especially if you took that and that. You really don't. Okay? One good trade for the day is enough. Just because you see people taking 2 or 3 good trades a day doesn't mean you have to risk your profit you just made. For what? Right, guys, so just so you know, when it comes to the A plus setup for a inverse fair value gap strategy, right? It is liquidity sweep, right? Preferably with the fair value gap at the liquidity sweep. V-shape recovery. So it then goes up and inverses. So let's say this is the, what am I doing? Yeah, right. There we go, down. There. Okay. It creates a fair value gap, does this, and then inverses. Okay. Inverses there. Right. And let's say there's a fair value gap like this on the 1 minute. Okay. It closes here. Right. There's no other fair value gaps. There's no nothing. There's just a 1 minute fair value gap. Right. However, we are delivering. This is liquidity. And there's a higher time frame fair value gap like this. Okay. We are delivering from a higher time frame fair value gap. We've swept liquidity. And now we are inversing a 1 minute fair value gap. Or a 2 minute or a 3 minute. As long as we are inversing every fair value gap at that level. Doesn't matter how many there are. There can be 1, 2, 3, 4, 5. If all of them are inversed and all of them are officially inversed, then you can take that. As long as ES is also starts to move in that direction and inverses its fair value gap that's on ES as well. To make it A++ is that if ES is this is ES, right? So let's say ES is up here, okay? So ES came down like this, it did this, and it just went like this, there, okay? And there, right? Fair value gap, inverse, right? So this is ES, this is NASDAQ, right? Did I do this right? So let's say, see if I do this right. So it would have to be like this, I think. Like this. There to there, there to there. Okay, so let's say this is a trend line that you're looking at from there to there. And a trend line you're looking at from there to there. This will make this trade even better, okay? Is that there's an SMT, right? SMT is basically, there's that low to that low there, right? See how it's there to there and there to there. That will make this trade even better, okay? And ES closes above the fair value gap, NASDAQ closes above the fair value gap, then you enter in like this as soon as it closes, and as long as your stop loss in theory, okay, Lewis does this. I'm too shit scared to do it, but Lewis does this. If the candle closes below the fair value gap, that's your stop loss. So whether it's there, you know, but generally speaking, you put your stop loss below the fair value gap, but a little bit of a distance like there, not just tight, like there, right? And you target first form of liquidity. So let's say this is the trade, right? your you would move your stop to break even as soon as this gets hit there. As soon as price starts to move up and gets to this white line, that's the first internal liquidity sweep. You would then move your stop to break even, especially if there's a fair value gap here, right? So if there's a fair value gap like this, okay, 100% you move your stop to break even as soon as you get there. Even if it comes down, takes you out of the trade and moves up again, doesn't matter. Once it's swept this liquidity area, that's it. You don't know if it's going to sweep and then come down, and you don't know if it's going to continue inverse and go all the way up. So this is the inverse fair value gap strategy in a nutshell, and this is the perfect setup if there's an SMT delivering from a higher time frame fair value gap, SMT, liquidity sweep, inverse all available fair value gaps with decent price action. I'm going to say that again because that's another important thing. Okay, if this just consolidated and went sideways and went up a little bit, down a little bit, and then eventually down here somewhere, it inversed this fair value gap, that's not what we're looking for. We're looking for it to sweep liquidity, create the fair value gap, and within at least 3 or 4 candles inverse, preferably 2 or 3 candles inverse, right? That's what we're looking for. So the price action needs to be right as well. So there's a lot of criteria that needs to be met when it comes to the inverse fair value gap strategy. Okay? That is why you will see me use the AMD setup a lot more, because I think it presents itself a lot more than the inverse, because the inverse relies on 2 pairs, NASDAQ as well as ES. It's got to, you can't have ES do this, right? Respect this fair value gap and this one inverses. Why is this not going to work? It could work because ES could respect this fair value gap and start moving down. And once ES respects and starts moving down, NASDAQ, because it's a correlating pair, will go, okay, I'm going to either sweep liquidity, right? So I'm either going to come up here, sweep, and then start moving down. Right, so that is a very important thing to know as well when it comes to this. And the only reason I can show you stuff like this is because I paid for 2 different people's Discords to learn this strategy. And I spent 2 months with the one on their Discord, and I spent a month with the other one. And then I followed the one guy for a year trying to learn it and perfect it. So it's a very effective strategy. It works extremely well as long as all the ducks are in a row. Maybe that's a good that's not a duck, is it? Where's a duck? This is not a duck. It's a swan. Wait, is that a duck? Let's call that a duck. It might be a little swan or whatever, but let's say that's a duck. Okay. Okay. Let's make this as simple as possible. As long as your ducks are in a row and they are following each other, meaning oh, what's happening here? SMT liquidity, SMT liquidity. Let's just do this so we get a little bit more space. Okay. Let's do it from left to right. SMT liquidity. Let's go high FVG. High fair value gap. Okay. Then we go SMT liquidity, half fair value gap, inverse fair value gap, candle close. Oh, what am I saying? Okay. Candle close. And then we'll go break even at internal. And the next duck. Nas plus ES, both inverse value gap. Okay. I don't know how much more clearer this needs to be. Okay, if all your ducks are in a row, let's go. equals. Got this the wrong way around. Doesn't matter. Take trade. This is just backwards. Imagine this, that side. Doesn't matter. Equals take trade. Okay. SMT, liquidity sweep, delivering from a higher fair value gap, inverse fair value gap candle close, at break even at internal, NAS plus ES both inverse. This actually needs to be the other way around. Okay, so all your ducks are in a row. Equal take trade, right? Now, if hypothetically this duck is slightly off like this, right? Your percentage of winning that trade drops slightly. Okay, this one you can sort of get away with. This is not A++ at this point. Okay, this could potentially still be an A+ setup, right? But the extra plus is an SMT. This is important, guys. Now, if, for example, this is not there and this is not there, now we go from A++ to B+, even a B setup. That's how far. This is so important. Liquidity sweep, okay? The more ducks that are not in a row, the lower the percentage is for you winning this trade. It's that simple. You start off with the high percentage, okay, and I'm not going to say 100%. Let's call it 80%. Let's say 80%, okay? This one drops off. Now you have a 60 to 70%. Liquidity drops off. You're not sweeping liquidity. Now that 60% goes to maybe 40%. Delivering from a higher time frame fair value gap, now you're at 30% if you don't have these three things. So if you just basically go, oh, there's a fair value gap. I've now inversed the fair value gap, and I'm going to target the internal liquidity. If this is all you're going for, meaning there's no liquidity sweep, there's no box here, there's no nothing, you just see a fair value gap like this. There's a fair value gap, all right? Or this one here, you just see this and you go, it's closed, it's inversed, I'm going to target down here. If that's the case, you're now at like 20% or maybe 30%, 20 to 30%. You don't want to be at this level. You don't want to be at 20 to 30% odds on that trade. You want to be at least 70% or 80%. You can get away with maybe the SMT not being there. So this duck, this SMT duck, you can maybe get away with, right? But the liquidity sweep, the higher time frame fair value gap that it needs to deliver from, all of these things need to be there. And if they're not there, it lowers the chance of you winning this trade. I don't know how much more simple trading needs to be. If you've never been explained to like this, where there's 1, 2, 3, 4, 5, 6 things that you just have to look at for the strategy. Okay? If this is not something that is making you click and go, okay, I've now heard him saying all my ducks need to be in a row, and this is what each duck represents. If that's not as simple, the most simple explanation of this strategy, then I don't know how else to make it as simple as possible for you to understand. The only other explanation that you don't understand what I'm talking about is that you don't know what a SMT is, you don't know what a liquidity sweep is, you don't know what a fair value gap is, and you don't know what internal liquidity is. It's that you don't know the mechanics. You don't know the mechanics of trading. Then you need to learn the mechanics of trading. You need to understand, okay, an SMT is this, a fair value gap is this, and then once you know all of that, you come back here and you go, so when he said this duck and this duck and this duck, they all need to be in a row, and then you start looking at your chart and you go, is this duck in a row? Is that duck in a row? Okay, so I've got 1, 2, 3, 4, 5, 6. I've got 4 out of the 6. So the odds of me winning this trade is going to be 50%, 60% at best. Then it's up to you whether you want to take that trade or not. This is simplifying it to the bare bones explanation. I hope that whoever sees this on repeat and wants to learn a very simple strategy, that this is something, yeah. Your ducks need to be in a row. Okay, see how price is just stalling at the moment? It's got, okay. See how this, let's review this, okay? We just talked about ducks, right? The reason why we got away with this trade, if we took it, okay, is because it's a continuation move, number one, right? Number two, we delivered from a fair value gap, okay? We inversed a fair value gap, right? I don't know if there was a SMT or not. So when you look at having all your ducks in a row, you've only got half your ducks at this point, okay? At least 3 out of the 6 ducks are not there. But why did this work? Because it's picked a direction already. It's already picked a direction from here. And it's decided, boom, I'm going to go long. Okay? So that's why you can get away with less ducks. But if you're looking at the beginning of the move, your ducks need to be in a row. Okay? So if this is what we were looking for, the SMT's there, the fair value gap's there, that's 2 of the ducks. Okay? There's there would have been a fair value gap here that got inversed, right? That would have been the 3rd duck. Then ES would have had to show exactly the same inverse or similar inverse. That's another duck. You would then go to break even as soon as possible. That's another duck. So all these things would have played out, and you would have basically ticked off, okay, this duck there, you know? Because that's what I want to do. I want to make it as simple as possible, because there's way too many people out there that have complicated trading, that have made it so crazy to look at and to understand, that people look at, because the average person that's learning trading looks at a chart like this and goes, what the hell am I looking at? They look at this and they go, how do I read this? There's too many points of There's too many areas that are like, that are complicated. Like what do you know? How is this even a thing? And if I can simplify it for somebody to the point where I go, okay, just know what an SMT is. Just know what liquidity is. Just know what a fair value gap is. Okay? If you can do those three things, then you can look at a strategy like this and go, am I seeing a SMT? Yes. Is it sweeping liquidity? Yes. Is it delivering from a higher time frame fair value gap? Yes, it is. Okay, so if this candle closes above this square, which is the fair value gap that we are targeting, and ES is doing the same thing, then surely we can go up to this internal liquidity and target that internal liquidity. And sure as nuts, sometimes you will lose. This is one reality check that a lot of people need to know now getting into trading. A lot of times all six of your ducks will get in a row perfectly. You'll say to yourself, this is looking like the best setup ever, okay? And it will on paper look like it's the best setup ever. And then all of a sudden something happens and then your price just reverses on you. It's going to happen. It's not a matter of if it happens. It's a matter of when it happens, how are you going to deal with it? So if somebody says to you, yeah, this could happen to you, but I don't think it will happen, then they're full of shit. They're full of shit. Because it's going to happen where you believe in your heart that the setup you are trying to do is going to work based on your technical analysis, and it's going to go to shit. It's literally going to just reverse on you. It's going to do something stupid, like all of a sudden a wick is going to come out of nowhere and it's going to wick you out the trade. Like, it's just going to happen. And the sooner you wrap your head around that fact, the less pain it's going to cause you. Because when it happens, it's going to hit you hard in the chest. And it's going to affect you, the way you look at the markets. It's going to affect the way you trade. And especially that day, it's going to affect your trade going forward. If it's the first time it's happened, you are going to revenge trade at that point, because you are going to say, this couldn't possibly happen because I've done everything right. Everything is correct. On paper, it all looks right. And a lot of times, this is where I got caught, guys. This is where I got caught. A lot of times, I will look at a trade like this, especially without this strategy. It was Khan's strategy, right? I would look at, like, this is because Khan showed me how to trade in the beginning, guys, and he's stuck with me this whole time. So big shout out for Khan. But throughout the years, guys, I would say to him, dude, I'm looking at the charts and I see this happening. I think it's a decent trade setup. What do you think? And he'd say to me, okay, now go to the 15 minutes. What do you see? And I'd say, okay, there's in a fair value gap. I'd be like, okay. And then he'd be like, okay, cool. So do you still think it's a good setup? You know what I mean? So, like, a lot of times people will see things that you don't see. You in your head will convince yourself that this is a good setup because it's ticking a bunch of boxes. Especially if you've got 1, 2, 3, 4 ducks in a row and everything starts to line up. And then all of a sudden, right at the end, you're waiting for that last duck. Right at the end, ES goes, sorry, I'm not going to do this. I'm going down. ES respects and then starts moving down. And then you go, it's not that big of a deal. At least Nasdaq just inversed. So you enter. Now your ducks are not in a row. So now what you've done is you've convinced yourself that, oh, it's not too much of a big deal. It's okay, you know. I still do it to this day. This still catches me every now and then. So I'm basically doing these live streams to not only help everyone else who's struggling like me, but to hold myself accountable so that I don't break my own rules. So if I've got a rule that says I need ES to inverse as well and not respect the fair value gap, then ES better fucking inverse. It's that simple. Okay? Another thing with this strategy, let's say you're entering an ES, okay? And this is the fair value gap that you're targeting. And this is your close there. It wicks up, okay? And then closes here. So let's say this is let's draw it out actually. So let's say this is the candle. This is the candle that you are, oh no man, that you are targeting. So let's say, what am I doing? There. Let's say this is the candle you are targeting, right? You're waiting for that inverse, okay? And then this happens. What can I use? Oh, let's use a trend line. Screw it. What the hell? Why is this not working for me? Not being a peg. Let's just say that's your candle, okay? Let's say line. Let's say, okay. Let's say this is the candle you're targeting. There's the fair value gap, okay? This is internal liquidity. This candle goes up. It goes up past internal liquidity has now been taken, right? Then it comes down and closes above the fair value gap, right? So let's say it does that. You go, I'm in. Boom. There's the candle close. There's your stop loss. So you say, I'm in. Okay, there's the lows, whatever. There's your trade, right? The problem with this trade, it's so glaringly obvious to me. But the problem with this trade is that remember that internal liquidity that you are targeting for your break-even trade. Meaning, if this trade closed there, when it gets to that white line, you're at break-even straight away, okay? If this goes up, sweeps that liquidity already, and then comes down and closes above that fair value gap, your safety net there is gone now. You don't know if that's what it was targeting originally to reverse down. You don't know. Nobody knows. That is designed there for your stop loss to go like this. So now if it does go up there and reverses down, you're safe. You haven't lost any money. And you will get stopped out like that a few times if you choose this strategy. And a few times it's going to be frustrating because what will happen is that it'll go up, it'll come down, it'll stop you out. And as it stops you out, it'll just continue going up. That is going to happen with this strategy. And that's what you need to accept going forward if this is the strategy you have selected, right? Now, it might be perfect some days. Some days it might just be an inverse there. There's no wick. The wick is like that. There you go. Right? There's your trade. Boom. Now, when it gets up there, you drag your stop to break even, and hopefully it just continues. There's your trade. So that is very important. And that's something that's that I had to learn the hard way many times. I've lost so many trades because I thought, okay, it's closed above, but it's swept that liquidity, so it should be fine. No, guys. The second it sweeps that internal liquidity, you are not fine anymore. It changes everything. Even though that's the last thing you are looking for in terms of your ducks. Every duck started to become in a row. And a lot of times it might still work. If all the ducks are in a row and there's a huge SMT and it's such an important sweep on liquidity, like external liquidity that is juicy as hell, okay? And you have multiple higher time frame fair value gaps. I'm talking about a 4 hour, a 1 hour, a 15, all in the same place. And you deliver from it hard. So you bounce off it and you inverse. Then you could get away with it. You could actually get away with it. However, a lot of times that liquidity, internal liquidity sweep is sometimes all it's looking for before it reverses down. So if it sweeps it before you get in, I'm just saying your win rate now goes from 80% to 60%, if not 50%. That's how much it drops. I hope that helps, guys. We can do these type of strategies and delve deep inside these strategies from time to time. So today's stream was all about getting into one or two strategies, learning it, breaking it down, making it as simple as possible like this. Because I believe that people are visual people. They learn visually. I couldn't even say it right. And by putting ducks here and shortening what you need to look out for, this is how I would learn it, and this is how it would make me click. You got to have that moment where it just clicks for you. And if you haven't had that moment where everything just clicks, then you're going to struggle until you find that moment. It might not be this strategy. It actually might be a random strategy or some basic strategy like support and resistance. Okay? That just might be the strategy that clicks for you. Right? Or opening range breakouts. Or even the market maker model, right? That Khan uses. That one might click for you. But if this one clicks for you, great. And if you're watching this on repeat, when it's been recorded, then maybe save this, watch it a few times, because I've tried to repeat myself multiple times, and I've tried to make it as simple as possible for you guys to understand. So this is the inverse fair value gap strategy. This is what the guys that on influencers on Discord and Instagram, this is what they do. Okay, you have Lewis, you have Dodgy, you have who's that other guy? Not TJ, or not that guy. What's his name, man? Come on. What's his name? PJ Trades. You have PJ Trades. You have Lewis, and you have Doji. Those are the ones that I basically learned a lot of these strategies from, and those are the ones that, especially Lewis and Doji, those are the ones that actually have they do this and only this. That is their strategy. That is all they do. They literally do nothing else, guys. No support resistance, no nothing, none of that shit. It's literally as simple as this. That's all they do. They don't do AMD setups. They don't do, well, actually, I lie. PJ Trades does. I'm talking about Dodgy and Lewis. They do nothing else. PJ Trades does multiple strategies. Very good, very experienced. 10 years worth of experience, apparently. Very good at what he does. That's one thing you'll never hear from me. You'll never hear me not give credit to the people that I learned from, because I really don't care if people want to go visit them, if people want to see their Discord, if people want to go buy their course. Like, I don't care. I'm here for me. I'm here for my strategies. Well, when I say my strategies, the ones that I want to focus on, and I'm here to show you guys, and basically, hopefully, one day help as many people simplify trading as possible. If it's simple, easy to understand, straight to the point, great. One side effect to me, guys, and I'd say one weakness that I have is that I waffle on. I don't get straight to the point. I can waffle on for hours. So if this irritates you by me sitting here just talking about trading over and over again, and you want more action, then I'm sorry, I can't help you. But soon, when I decide to start trading properly again, you're going to be seeing me live trade with on the side here with Trade of 8, and you'll be able to see my entries, all my wins, all my losses, everything. At the moment, I'm just trying to teach and show people by doing call outs. Today it was what, 2 out of 3 that we got. We almost got this one as well, but we saw it a bit too late. We could have easily taken it up here somewhere, right? So we could have entered there, so that would have been another one. But we took an L here because we thought that it would reverse on us. So 2 out of 3 is not bad. That's basically what I would love to do every day, is 2 out of 3. I'm happy with that, guys. So I think I'm going to call it there. I hope you guys had a good session. I know there's not a lot of people that were listening today, but if you're watching this on a recorded session, or you're watching this 2 months from now and it's recorded, I hope you have an amazing day. Thank you so much, guys, for whoever did pop in. And yeah, next time, just shoot me a message and let me know what you guys want to talk about or anything like that. Take care.